Gold is entering a very important phase, and right now the best approach is to stay focused on structure, confirmation levels, and the behavior of price around critical zones. Up to the last completed candle, the market has shown a potential turning region below the 42.83 area, but in Elliott Wave terms, nothing is confirmed until price moves through key validation points. We observe structure, but we do not declare completion unless the market itself confirms it. At this stage, the first important signals for a downward continuation appear only if gold breaks below 40.41 and then 40.33. These levels carry real significance because a clean move under 40.23 increases the probability that a broader corrective or impulsive decline is unfolding. Until those levels break, any expectation of further downside remains only a scenario, not a confirmed path. If gold does begin a deeper decline, several structural zones become extremely important. The first cluster sits around 39.86, 39.63, and 39.55, where technical reactions and temporary pauses often appear. A deeper zone, one that marks a heavier corrective weight, lies near 39.24, 38.92, and 38.87. These prices align with major Fibonacci relationships, SQR projection steps, and historical rotation points, so the market may slow down or react here. Below this cluster, the extended region around 38.30 to 37.99 and even towards 37.90 opens only if downside momentum becomes stronger and more impulsive. This region generally reflects a deeper C wave or a more forceful third wave. Finally, it is essential to remember that a sustained move above 4283 cancels the entire downward interpretation. As long as price remains below that region, the weight of probability stays with the downside, but only price will confirm the next move.
Gold on an intraday basis has completed a meaningful sequence from the previous low and has now developed a structure that closely resembles a W to X formation. Up to the last completed candle, the price action indicates that the market has traveled through a corrective rise, showing the characteristics of a potential X wave, but confirmation always depends on how the next few candles behave. From the earlier low, the movement into the recent high formed three distinct legs, which is typical of an X wave in Elliott Wave terminology. This type of movement usually connects two corrective segments, but it is important to remember that the X wave is only confirmed when the market begins to respond from the upper region and starts forming a controlled decline. We watch the candles carefully because intraday structures can shift quickly. If the structure is indeed forming after completion of the X wave, the next sign of validation comes when the market begins to push down from the immediate upper resistance. A clean move below the minor intraday supports, especially those right beneath the last upward leg, strengthens the probability that the X wave has served its purpose and that the next corrective segment may begin unfolding. However, as long as the market stays steady above those intraday supports, it keeps the possibility open that the structure is still developing sideways. Intraday Elliott Wave always demands patience because the waves inside the WXY family can evolve with overlaps and pauses. For now, we simply acknowledge that the market has completed a clear three-wave rise into the potential X region, and we wait for confirmation from price before assuming the next corrective swing has begun. Only the movement after the last candle will decide the true direction.